Welcome back. Global markets are regaining some ground this morning after escalating fears of a trade war between the U.S. and China sparked a sell-off yesterday. The Shanghai edged higher overnight. Take a look. A Shanghai Composite narrowly avoiding bear market territory. Chinese shares hit their lowest levels in nearly 2 years yesterday. So while trade tensions have rattled investors in the U.S. As well as China, I spoke with Allianz Chief Economic Advisor Mohamed El-Erian yesterday. He said the U.S. wins no matter the outcome.
So the U.S., in a way, outperforms in whatever scenario we end up. The question is, what does the global economy as a whole look like? So the house is solid. The neighborhood is uncertain. Why does the U.S. outperform? Well, if we get fairer and free trade, this will help U.S. growth. If we slip into a trade war, the U.S. is a relatively closed economy, and therefore the U.S. will get hurt less than others.
And, of course, that was during yesterday's trading session where the markets were lower. This morning is a complete reversal, so don't get confused by those numbers. Joining me right now is James Investment Research President and Portfolio Manager Barry James. Barry, good to see you. Thanks for joining us. Do you agree with Mohamed El-Erian that this trade dispute is worse on China than the U.S.?
It potentially is worse for China in the sense that they obviously ship more to us than we ship to them. But when you look at trade wars, that nobody wins. It's a bad situation. Back in 2002, in fact, we saw the stock market fall 30% after tariffs were placed on steel, and that only lasted for a year. So we have to be very careful. 27% of our economy is exports and imports, is trade. So if we start getting that thing fouled up, that's going to be a major impediment for our economy.
So you're an investment manager. How do you look at the trade dispute right now from your standpoint? Do markets believe that the president is negotiating, or are markets nervous?
They believe he's negotiating. If the markets believe that this is the way things are going to be, they would be in free fall right now.
Okay.
I believe the president wants a victory in this area, so he has a strong negotiating hand as he goes forward. I believe folks like Larry Kudlow talk to him all the time about the free markets and free trade, and I believe that's what he wants in the end. But he's willing to use whatever hammer he can get his hand on right now.
Sure.
Barry, this is Lee Carter speaking. I've seen that the voters tend to agree with you. They think that it's a negotiating strategy as well. But how long do you think that the investors will give the president to say, I still believe, I'll give you the benefit of the doubt and say this is a negotiating strategy rather than a long-term problem that we're going to have?
Well, I don't know that I can answer the question based on other people's views. The only thing that we see with this situation is that as long as we do have open paths for trade, then that makes all of our companies do very well. It's more impactful, from an investment manager, on large companies rather than smaller companies. That's one of the reasons why we think that there's a shift going on towards smaller companies, more value-oriented companies, because they don't have that trade worry hanging over them, and that's something that can last for years, actually.
And the Russell 2000 index hit an all-time high. So is that what you're recommending to clients right now? Buy Russell 2000 related companies?
As far as looking at the smaller companies, yeah, Russell 2000 type companies are much more attractive to us right now. They have lower valuations, earnings are okay, and one of the things that's kind of hidden in all this tax change is the fact that they have had higher effective tax rates than larger companies, so they're getting a bigger boost from that. And as we look at that whole area, they're outperforming. In the last month, they've done about double what the S&P has done. They've outperformed so far this year, so we think that's the shift that's coming, and it can last for a long time.
Just one thing I wanted to add, Barry, because we talk about the permanent tax cuts on businesses in this country, on corporations. It really alleviated uncertainty about what a company's tax bills would be down the road, and also opened the door for companies to make long-term investment decisions. These tariffs do the exact opposite of that. I'll point out one thing with these additional tariffs, the additional $200 billion, maybe $400 billion. It is going to take months to basically go through and decide which products imported from China would get hit by these tariffs. And so, again, that is uncertainty. That gets in the way of businesses making hiring decisions and investment decisions.
That's true. Absolutely. Barry, it's good to see you. Thanks so much for joining us this morning.
Good to be with you.
Barry James joining us there.